What if the bank you trust with your money is quietly making money from you every single day? Before you scroll away, if you use a bank account, a credit card, or any financial service, this might completely change how you see it. Most people believe banks are simply there to store and protect their money safely. You deposit your income, you pay your bills, and everything feels smooth and convenient. You get access to apps, cards, and transfers that make managing money incredibly easy. And in return, it feels like you are barely paying anything at all. Some accounts have no visible fees, transactions feel free, and everything just works. This creates a very simple and comforting idea in your mind. You are the customer, and the bank is providing you with a service. But here is the question that most people never stop to ask. If all of this is so convenient and often feels free, how are banks actually making money? Because banks are not charities, they are businesses designed to generate profit. And that profit is not coming from nowhere. It is coming from the way you interact with money every single day. At first, it does not feel like you are paying anything at all. You are not handing over cash every time you use your card or check your balance. So it feels like you are simply using a helpful system without any real cost. But what feels free is often where the system becomes most powerful. Because when something feels free, you stop questioning how it actually works. You use it more, you trust it more, and you rely on it more over time. And that reliance is exactly where the value begins for the bank. Because your money sitting in the bank is not just sitting there doing nothing. It becomes part of a much larger system that is constantly moving and generating profit. Banks do not just hold your money. They use it. They lend it, invest it, and turn it into opportunities to earn more. And while your money is being used in those ways, you receive only a small portion in return. This is where the relationship starts to look very different from what you initially believed. You thought you were simply storing your money in a safe place. But in reality, your money is actively working for the bank behind the scenes. And the more money flows through your account, the more opportunities they have to profit. But the most important part is not just what they do with your money. It is how your behavior fits into the system they have designed. Because every decision you make, from spending to borrowing, can generate revenue for them. And most of it happens so quietly that you never feel like you are being charged directly. Which is exactly why so many people never realize how much value they are actually providing to the bank. Now here is where things become much clearer. Because this is how banks actually turn your behavior into profit. The most obvious way is through lending, which is where a large portion of their revenue comes from. When you take a loan, you are not just borrowing money, you are entering a long-term agreement. You agree to pay interest over time, and that interest becomes income for the bank. But what many people underestimate is how large that difference can become over time. The amount you repay is often much higher than the amount you originally borrowed. And the longer the loan, the more you end up paying beyond the original cost. This applies to car loans, personal loans, mortgages, and especially credit cards. Credit cards are one of the most profitable tools banks offer because they combine convenience, flexibility, and high interest rates into one system. If you carry a balance, you are paying interest every single month. And even if the payments feel small, they can stretch over long periods of time. Then there is something called the spread, which most people never think about. Banks pay you a small amount of interest to keep your money with them, but they lend that same money out at a much higher interest rate. The difference between those two rates is where they generate consistent profit. So while your money earns a little, it is helping them earn significantly more. Then come the fees, which are often small but add up over time. Late fees, overdraft fees, service charges, and various penalties. Each one might not seem like a big deal on its own, but across millions of users, they create a massive stream of income. And these fees are often tied directly to behavior. Missing a payment, overspending, or not paying attention to your balance. The system is designed in a way that makes these mistakes easy to make. And every time it happens, the bank earns a little more. But here is the deeper layer that most people do not fully see. Banks are not just reacting to your behavior. They are shaping it. From credit limits to payment options, everything is designed to keep you engaged. Minimum payments, for example, make debt feel manageable instead of urgent, which keeps you in the system longer and increases the total interest you pay. And the longer you stay in that cycle, the more valuable you become to them. Because consistent users who borrow, spend, and pay over time generate predictable profit. And that predictability is exactly what the system is built to maximize. Which leads to a realization that changes how you see everything. Banks do not need you to fail, they just need you to keep using the system the same way. Because as long as you stay in it, they continue earning from your behavior. Now here is the part where everything shifts. Because once you understand the system, you can stop being passive inside it. The goal is not to stop using banks, because that is not realistic in modern life. The goal is to stop using them without understanding how they actually make money from you. The first step is awareness, because you cannot change what you do not see clearly. Look at your accounts, your fees, your interest, and your financial habits over time. Notice where your money is slowly leaking without you paying attention. Because once you see those patterns, they become much easier to control. The second step is eliminating avoidable losses. Pay your balances on time, avoid unnecessary fees, and stay aware of your cash flow. These small adjustments can save you more than you expect over the long term. The third step is using credit intentionally instead of emotionally. If you use a credit card, treat it like cash and pay it in full whenever possible. Because the moment you carry a balance, you enter the system that generates profit for the bank. The fourth step is making your money work for you, not just for them. Be intentional about where you keep your savings and how you use financial tools. Even small changes in where your money sits can make a difference over time. The fifth step is shifting how you see your role in this system. You are not just a user. You are a participant in a system designed to influence behavior. And once you see that clearly, your decisions start to change. You question more, you pause more, and you act with more intention. That is how you move from being predictable to being in control. Because the system works best when your behavior is automatic. It becomes less effective when your behavior is conscious. And that is the real advantage most people never develop. Not more money, not better tools, but better awareness. So if this made you rethink how banks actually make money from you, I would love to hear your thoughts below. And if you think more people should understand this, share this video with someone who might be using the system without realizing it. Also consider following the channel, because we break down money systems in simple ways you can actually apply. Because once you understand how the game works, you stop playing it blindly and start choosing your moves.